Hello and welcome to the Adansonia Global Opportunities Portfolio up to September 23. Our disclaimer, please read it at your leisure. To move forward, I will take it as read. So the portfolio continues to perform well. Here I have the performance at the end of July. We basically didn't have a little webinar last month for personal reasons. I apologize. So just giving you a quick update. July was a strong month for the portfolio. 3.2% versus our index, 2.3%. And more importantly now for August, the portfolio continues to perform well. We delivered 2.2% after expenses for the month of August versus a flat market. And since inception in January 2019, or end of January 2019, the portfolio has returned 15.8%, compounding versus the market 11.3% for 4.5% per annum outperformance. So we're very happy with the way the portfolio has performed, especially at the moment where we actually have a relatively defensive stance in the portfolio. We're running with about 13% cash, and we have no cyclicals except for Shell. Shell is the only cyclical holding we have in the portfolio. In saying that, Shell has boosted both its dividend and its buyback, so the downside is relatively protected from these levels, and it is screamingly cheap. So we're very happy with the way the portfolio is performing in a rising market, given that we've got not full exposure to the market with the current portfolio. The feature stock today is MasterCard. Look, MasterCard, as you can appreciate, is very similar to Visa, which I spoke about a few months ago. So it's really just insert the new name here, but effectively it facilitates global commerce between financial institutions and merchants, and along the way takes a clip of the ticket, and it holds no credit risk. So basically, it's the railway or the tram tracks between the financial institutions where it co-brands merchants and consumers. It's leveraged to key structural themes, as we've spoken about before. So a growing global population, also a growing global middle class, and non-cash payments, as we spoke about with Visa. Still around 60% of the world's transactions are still in cash, and the non-cash payments industry as such is forecast to grow at a compounding annual growth rate of around 16.5% over 21 to 26. Furthermore, MasterCard, along with Visa, it's a very strong duopoly. Or if you include Amex and Discovery, an oligopoly, but it's got high barriers to entry, and effectively it supports strong margins. And MasterCard is supporting, or is basically delivering EBITDA margins of around 60%. The difference between Visa and MasterCard in terms of the revenue mix is that Visa, or MasterCard, I should say, has less from the Americas and Asia and more from Europe, Africa, and the Middle East. But that's the key differentiation between the two stocks. Anyway, the stock itself on our modeling is forecast to grow at approximately, or I should say, earnings for the stock forecast to grow at approximately 90% per annum from 2023 to 2026, and it's supporting a share price valuation of around $468 a share, or a little bit under $470, which is around 13 to 15% upside on the current share price. So we're very happy with this holding, and it continues to perform very well in the portfolio. So anyway, that is it for this month. Again, you will see our contact details on the bottom right of this slide for myself and for Tony. Please feel free to contact us either by email or phone at your convenience if you have any questions. Again, we thank you for your ongoing support and interest in our product, and we will be speaking to you again next month with the quarterly update at the end of September. Okay, thank you very much.